I'm gonna wing it. Well. Welcome back to another Black Fire analysis. And today, I would like to provide the community with a little bit of an instructional video. To me, it's a very helpful instructional video. And today we're going to talk about horizontal supports and resistances. Now, horizontal support and resistances are one of the key components in how I conduct my own analysis and how I basically make my own trading decisions. It is the strongest indicator, in my opinion, of my analysis. It outweighs RSI, it outweighs stochastics, it outweighs, basically everything. It's, in my opinion, one of those standalone indicators that you could use to base, very valid trading decisions as a result. And, you could use them alone without any other type of indicator and still, find ways to be a very successful trader long term. So first we should discuss what are supports and resistances. Well, support is when you have price decline, and price decline hits a specific point and fails to continue further to the downside. It actually meets a point and gets supported by buyers, which means at that specific level, whatever the level may be, buyers outweighed the amount of sellers, and the price action supports by coming back up. That's how you get a confirmation of support. And resistance is quite the opposite. It is when price action pumps up and meets a specific level, and sellers have more power, more force at that region than the buyers do. Typically, it's called resistance. Other areas it's called rejection. Depending on how the price action acts upon hitting a support or resistance, determines the strength or the weakness of such. Typically, per classical technical analysis, when a support is tested more than 3 times, it is likely weaker as a result. The more times a support level is tested to the downside, the weaker it inherently becomes. And the same principle applies to a resistance. The more times a resistance is tested to the upside, the weaker that resistance inherently becomes. Again, support and resistance is a very strong way to track your trades, track your risk management, track your stop losses, track your entry, your exit points, track your take profit levels. Horizontal support and resistance by far has been one of the most powerful indicators that I use to this day. And quite simply put, they're just lines. And we're going to cover a few examples of how to identify support and resistance. And of course, we're going to go on Mr. Bitcoin here. Now here I have a blank chart, and we'll actually go here and turn on volume here. We're not going to talk about anything outside of how to identify support and resistance and know that is actually support and resistance. The first thing you want to do, obviously, is identify tops. How do you identify tops or highs, right? Quite easily. Right here, we'll give you an example of a low first, okay? So we got this top here. As soon as you identify a top, you can put a horizontal. Here's your top right here. You got your 7th of January top right here. And how we confirmed it as a top is that we saw a little bit of a doji style candlestick right here and then sell off. That's how you got that confirmation as a top. So we're going to put our resistance right there, okay? And now we can use that point in historical relevance to see in the past when it has actually acted as support and resistance. And look at this, seeing how Bitcoin has never been to this price point prior to 2020, we can assume that there's not much price action history to basically confirm it as resistance until now. We have this blow off top, right? And now we can use this as a point of reference in the future to see how it acted as resistance now. We can see, just by using this point of reference from January, the beginning of this year, we can see price action now is currently using this point as resistance. See how we pump up to it, fail to close above it, and actually remain below it. This is confirming it as resistance. Now, remember what I said in the past. The more times a resistance is tested, 1, 2, 3, 4, the weaker it inherently becomes. 5, 6. So now we have 6. Well, these two could be argued that they're not actual tests, but close enough is close enough. These two candles here confirmed a test of resistance. This candle here confirmed a test of resistance yesterday on the 13th of June 2021. And this candle today on the 14th of June 2021 is still holding this region as resistance. When price action fails to go above a specific point, it is considered resistance. Now, let's find us a support, okay? Quite easy, right? We're going to go, boom. Boom. When you find a support, it's common to try to find as many points of contact on that region as possible, okay? So the reason why I picked this region instead of this region is because this region here holds more significant historical relevance of the overall structure, okay? So we got contact after contact, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 touches of this support region here. Now we could see all these touches in the past. Again, the more times a support is touched by price action, the weaker it inherently becomes. And we saw evidence of that after all these touches of this support region here, and it finally failed. But this was a little bit of a bear trap, as we can see. If you saw the analysis on the 15th of June, you would have heard me call that this was a little bit of a bear trap here. A nice little divot below and a recovery back above. Now we saw this this candle closure back above and a pullback to confirm it as support. And then boom, liftoff. Now we see price action meeting resistance, okay? So now we're just going to go and identify a couple more supports and resistances here. For now, very, very, very obvious resistance can be laid on the all-time high for Bitcoin, right around 63,650. That is on a candle body basis. Now you can use wicks. Again, wicks provide significance when it comes to contact with support and resistance, but I always, always, always line my support and resistance with candle body closures, because that provides much more significant weight on the analysis that you're trying to conduct. Now, obviously, this can be, support right here, right? Move it down a little bit lower, maybe line it up with more points of contact here. That proves to be very well. Here we got 2 points of contact confirming this region as resistance. 3, 4, 5 points of contact, failure. A nice another base low right here. We can put a support level there. Boom, liftoff. A little bit of consolidation in this region here. Boom, breakout. Very, very, very tradable. Now, every high and every low doesn't have to be confirmed as a support or resistance. Typically, if you try to, you try to point out every high and every low as a beginner, you're gonna end up with a whole bunch of lines that are construing your chart here. Now, all of these lines that I'm placing are relevant. And they do provide weight within the analysis. However, in my opinion, they're not all needed sometimes. I like to keep things very, very simple sometimes when I'm trying to do analysis. Now, I do know that my charts get quite convoluted quite often when I'm doing my analysis. I have a little more experience, with that kind of stuff. So, it's relevant to me. Identify a top. There's a top right there. There's another resistance. And look at that. Look at this top right here. A top printed on the 13th of January, 2021. Fast forward to what? The 25th of May? And then the 2nd of June here, we got 2 rejections. Look at how that historical relevance actually played out. When this decided to break down, this was your resistance. If you scroll out to the past here, say this doesn't even exist, right? Say this price action doesn't even exist here, and price action pumps to a new all-time high, comes down, puts in a low. You can confirm that low, and then puts in a lower high. Here's your second resistance, and watch. Fast forward, right? Fast forward, Boom, it lines up perfectly with your resistance points on this consolidation phase that played out after the Bitcoin dump here. So you can see how powerful support and resistances are in relevance of past price action. Now, obviously, we can go a little bit further in the past. All of these levels here play significant relevance. If Bitcoin decides to dump to the crypto abyss here, you can identify support and resistances. I actually encourage you to identify support and resistances all throughout the history of Bitcoin, because they could prove to be very, very, very relevant to base your own trading decisions off of at some point in the future. Now, when it comes to talking about breaking above the all-time high, obviously there's no resistance to be heard of until price action pumps up and starts to sell off at a specific point. Now, we could get into Fibonacci's in a different video, but that's how I could, typically identify potential sell-off zones and potential resistances upon a breakout to new all-time highs. But that's for another day. That's for another video. For now, I want to focus on just identifying a couple of more examples here. Here we have a nice little low here, right? Here's your blow off top. Here's your all-time high within this Wyckoff distribution pattern for Bitcoin here, and this was basically your first tell that we were ready to see some major decline here. A very, very easy trade to base off of that, in my opinion. You get your base low here, and then look at this. Here's another resistance. You failed to rally to new all-time highs right here, and this actually confirmed a lower high. And that was your tell right here that this was ready to come to the downside. Now, I actually traded this, and I was looking at these two doji-style candlesticks, these long-legged doji-style candlesticks here. And the moment we broke this region on a daily candle closure basis, that was my tell. That this was ready to really start declining. What I actually did was wait for a back test to confirm this broken support as new tentative resistance. I waited for a back test to confirm it as resistance before I opened my position, and then I waited for that follow through, that oh so sweet follow through to the downside. So we'll go ahead and identify a couple more examples here. Again, you don't have to use every high, every low, every single one of them to find decent trades within the market. Sometimes keeping it simple is all that's required here. Like right here, these two lows here, I didn't feel the need to put a resistance here, because there's only 2 points on this price action, in relevance to nothing in the past. You know what I'm saying? So I didn't feel the need to put any kind of support here. Now, if price action starts pumping up, then maybe this region could become relevant, and I would put this as potential resistance in the future. Use it. How you feel comfortable with using it. It's not necessary to use all highs and all lows and all that sorts of sort of things. But keeping it as simple as possible, and more often time than not, it ends up being very rewarding for those who are trading with simpler methods here. So I try to keep things a little more simpler. I try not to convolute too much, but. That's support and resistance. Let's actually not end the video here. We can actually take this a little longer. We'll go ahead and identify a couple of more. Let's look right here. Look right here. Boom. Here's your nice little low. I'm going to boom. Here's your low, right? Here's your high, right? Boom. Boom. And you can put another one right here. Put another one right here. Doesn't provide very much relevance, in my opinion. There's not too much to go off of there, but it works. Whatever works, works. Let's go for a really easy one. Let's go for a consolidation. Right here is a nice example. Consolidation support level here. Again, while it's not completely on it, this is the main. This is the main support here, and this is the main resistance here. We can obviously identify higher points of resistance off of that, and then we can put a little bit of support on the upper channel of the consolidation period. All this is evidence of is the major range that was playing out here, bouncing between the higher support and the lower, the higher resistance, the lower support. Obviously gave you the evidence that this was trading within a range, and then it got real tight in between this, this middle resistance and this middle support here, bouncing back and forth in between these regions here, bouncing back, and then we break this resistance and boom, lift off. Again, we can just use these points of reference. The wicks can count. Wicks count as testing of the support. You don't always have to use candle bodies, although it is recommended to always use candle bodies. That's pretty much how I identify support and resistance. Now, again, I want to bring this into your guys' attention because it's horizontal support and resistances are historically relevant, okay? So the horizontal support and resistances that I just laid here, if you scroll on back, you can see how they're relevant to past price action here, right? Look at that. Support, 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 resistance, resistance, resistance. You see what I'm saying? Breakout. They all provide points. Resistance, 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 right? They all provide points of relevance for the history of the price action here. A nice little diagonal trend line just to be funny in the channel, whatever, I try to keep this stuff simple because, I myself am not this sophisticated, high-end, 30 years experience type of trader. I've only been doing this 3 going on 4 years, so I'm still learning every single day. I'm still learning what it means to be a professional trader. Study hard, work hard, play hard, take risks, yada, yada, yada. But at the end of the day, when it comes to horizontal support and resistances, I do believe that I have taken a keen mastering to that. Laying them out's not hard. Identifying the support of price action. Again, the support of price action is when the price declines and gets met where the buyers refuse to let the price go below. That they are buying, they are supporting the price of the asset at a specific point. So that's where you put your line. We can see in this region here, in this distribution phase, the bulls found support at the $5,960 region. Obviously, it doesn't have to be perfect. Nothing's ever perfect. This is an art, not a science, but you can see that they found support right at this region here. And look, all the tests. Boom, 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 right? We even get a break of resistance, a little bit of a bull trap here. Boom, back to this support, back to this resistance, right? Back to the support. Nice consolidation phase. Traded sideways for however many days. Came back above, broke the support, right? Broken support becomes new tentative resistance. Now this was actually in the midst of the 2018 bear market for Bitcoin. So when this level broke here, we didn't even see a back test to confirm it as a new resistance here. Instead, we actually saw follow through, just immediate follow through, a little bit of a consolidation phase right around this region here. And you could have put a base of support here, but this here was initially your tell that this was really ready to really start declining for Bitcoin here. But as far as support and resistances are concerned, I hope that answers any questions. And if it doesn't, I do apologize. I gave you the best explanation of how I use horizontal supports and resistances that I could. And I do hope it helps you in the future. And if it doesn't, if you want to see any improvements, anything like that, please comment. Please like and subscribe and tick the little bell if you enjoyed this video. Thank you for watching. I hope you enjoyed. And until next time, that's it. Peace and love, everybody.